Hey, good afternoon. This is Clark Neighbors with the market recap for the week ending June 12th, 2020 with BIS Commodities, Cedar Rapids, Iowa. Fairly quiet trading week for the grains in general. Corn down a penny for the entire week, beans up 4 cents, wheat down 14. Now in this afternoon's commitment to traders report, interestingly enough, the funds added to their short position in corn at 15,000 new shorts. They're almost at 300,000 contracts short of corn. Keep in mind the record was a year ago in May at 322,000. So we're within spitting distance of that old record. And that's something to keep in mind if there's a reason for those funds to liquidate some of those shorts, something to be aware of. Wheat funds are short 25,000 contracts, and beans are actually long 20,000 contracts and added length to that market over the past week. Much of that could have been attributed to what seemed to be a daily appetite for Chinese beans, as we've seen several announcements during the last couple of weeks. Keep in mind this comes in hindsight of an article 2 weeks ago in regards to China maybe halting U.S. ag purchases until a further time based on issues with relations with the U.S. and China. So we've seen some pretty solid Chinese bean buying over the last couple weeks. Keep in mind their appetite on a daily basis is roughly 5 cargoes, give or take 250 to 270 million metric ton per day. So when you see those announcements, keep that in mind. And right now, much of these purchases have been made for late summer, fall, which is more in the U.S. wheelhouse as the South American supply diminishes by that time. Thursday, yesterday, we had a supply and demand update. Please go to our website if you'd like to see a comparison historically going back to the late 80s in regards to that supply and demand update. No major changes in yesterday's numbers, not enough to really move the needle on the markets, as you can tell by the weekly changes. Ethanol production continues to get a little better. Margins improve, so does production. That all falls in line with reopening of the economy and more unleaded gas usage. So we'll see how that continues. The cash markets, there's been some pretty impressive pockets of premiums being paid basis-wise for corn, namely in areas where the ethanol plant or some plants in those areas come back online or ramp up production. The producer continues to be a very lackluster seller in this market, so just the available supply, at least at this point, is fairly limited. Also keep in mind logistically going forward, the Illinois River shuts down for maintenance starting the 1st of July, and in most cases is down through the early part of harvest. So that'll be interesting to watch. Impact that may have on basis levels in other river locations around the Midwest. One other thing of significance this week was the macros, namely the stock market. A lot of volatility this week with huge upswings early in the week. Thursday having the biggest down day we've seen, I believe, since middle of March. So volatility continues to escalate, if you will, and it's an ebb and flow between reopening, more virus, the Fed, government stimulus. Many factors floating around in that right now, but all in all, markets have performed very well over the last 30 to 60 days considering what we've went through. Grain producers need to continue to watch. We're kind of in that seasonal sell window between now and the middle of July. What triggers something for the market to go higher? Obviously weather this time of year is the main thing to talk about, but be aware of that because we're in that seasonal time frame. The macro or the fundamentals on both corn and beans, and more specifically corn, still look to be negative, assuming the supply situation is good. Talk to your broker. We were looking at some option strategies earlier today, so give your broker a call if you want to talk about some ideas on over these next 3 weeks, especially looking at some options. Cattle market, cash generally lower this week. Packer margins continue to be huge, even with pretty good drawdown of box beef this week, which is coming more. Box beef is more in a general area it is historically, but we're coming off record high beef values. How is that going to affect demand going forward? But the positive side is production is ramped up to over 95% of normal. A month ago, that didn't seem likely. So long term, this backlog of cattle, which some people say is a million head, whatever it is, that we have to work through, seems like we're at least stabilizing that, but also keep in mind on the other side, the weights are very big. They're 50 pounds above a year ago, which equates on a weekly basis about another 20,000 head for production. Going forward, again, on the grains, weather is going to be key. Now going home tonight on Friday, weather the next 6 to 10 days generally looks favorable through most of the Midwest, with not temperatures that aren't overburdensome and some rains later in that time frame. So the next 10 days looks, at this point, looks good for crop development, which will suppress rallies if they occur at this point. Keep in mind the fund short in the corn by the funds, and as always, 2020 continues to be an interesting year, so we'll see how things play out. But if you'd like to talk about any of these markets, feel free to give us a call. BIS Commodities, phone number is 800-373-2525, or catch us on the web at biscommodities.com. With that, have a wonderful weekend.